Good afternoon and welcome to the Asian Midday Market Watch, powered by Al Rajhi Bank Malaysia. David Kuo, founder of the Smart Investor in Singapore, is our guest today. David, good afternoon and welcome to the show.
Selamat tengah hari, Brian. Look at your swanky new office. Wow, you're making too
Thank
much
you.
money.
Thank you. Well, it's not mine. Starting today and for the next 2 weeks, we will be broadcasting out of Al Rajhi Bank's offices in KL. Now, I'm going to come back to you after we take a look at cryptocurrencies and how regional stock markets have performed. Now, we'll start with cryptocurrencies. Bitcoin is at 38,923. It's down 3.36%. Ethereum is at 2,915. It's down 4.02%. Now, looking at regional stock markets in Australia and Hong Kong are closed today for a holiday. So we start with the SGX, which is at 3,312.65. It's down 0.7%. Looking across to the KLSC, it's at 1,584.11. It's down 0.31%. Shanghai is at 3,187.6. It's down 0.73%. The Nikkei is at 26,749.5. It's down 1.54%. And rounding up the numbers, we've got the Kospi, which is at 2,697.46. It's up 0.05%. Now, David, what's your view on how markets have performed this morning after this long weekend?
Well, I think, Brian, everybody is really waiting for the earnings numbers to come out from the United States. Despite what we might say about the US markets, people are very sort of concentrated. They're very, very sort of focused on what American companies are going to be able to deliver in terms of earnings. We've already heard from some of the banks, Brian, and whilst the top line on many of the banks was fine, what really sort of hurt the banks in some cases was higher wage costs, the input costs. And I think people will be looking very closely at many of these American companies to see how many of them have that magical quality called pricing power, which will be able to negate to some extent the rising labor costs.
Okay, and this is why inflation is rearing its head globally, now synchronized inflation across the region, and it's come across to Asia as well, with food and energy prices soaring. What should we be watching out as Asian investors?
Well, I think that you have to wear two hats, Brian, and I always wear two hats. I mean, on the one hand, I wear the hat of an investor, and on the other hand, I wear the hat of a household, a consumer. And yes, you're absolutely right. Inflation is rising, which therefore means that whatever you're earning, whatever you have in terms of savings, that's going to be eroded by inflation. And those rising prices, there's very little that you can do about it, except when you wear the other hat, which is that of an investor, and you say, I'm going to put my money into those companies that have the ability to raise prices. And so therefore, your nest egg, whatever you've actually sort of put aside, whether it is for your wedding, your children's education, your retirement, that money has to grow in line with, if not higher than the rate of inflation, because otherwise that pool of money is just going to shrink in terms of its buying power, Brian.
Now, David, I'm going to come back to you and talk about some specific stock opportunities and investment strategies that you have for the long term. But I first want to get your insights in terms of China and two key things out of that. One, China data came out today. The GDP data was faster than expected in the first quarter. First quarter GDP rose 4.8%. Now, that was above expectations of 4.4% year on year. Now, the second thing is, of course, recently the PBOC raised its reserve requirement ratio. It cut its reserve requirement ratio. How do these both basically give an indication of the direction of Chinese regulators?
Okay, Brian. I fall into the camp of those people who are very skeptical of Chinese economic numbers. China can say its economy grew at 4.8% in the first 3 months of 2022. But my question is, where did that growth come from? It certainly didn't come from consumers, because retail sales were down in the first 3 months of this year. And then if you have a look at the impact of COVID-19, the impact on the Chinese economy, Many of the factories were not going back to work. The ports are shut. Shanghai, they're not able to export whatever goods they have in store at the moment. And so where did this sort of 4.8% for the first 3 months of this year come from? Maybe it sort of came from government spending. Maybe it came from private sector investments. That could be a possibility, but certainly in terms of exports and in terms of retail sales, they weren't particularly strong. And I think as we go through 2022 into the end of this year, whether or not China will be able to achieve its 5.5% GDP annual growth, some people are putting into question. But I tell you what, Brian, on the 31st of December, when China announces its GDP for 2022, it'll be 5.5%, because I defy anybody in China to come up with figures that are going to be less than 5.5%.
Now, David, on a different note, there's an article on the Smart Investor in Singapore on David Kuo's stocks for the next generation. Now, first of all, David, what do you look for in terms of stocks that you put your money in?
Well, primarily pricing power. I mean, that is something that you need whether you have inflation or not. And pricing power is one of those magical ingredients within a business. If you think about it, Brian, whether you have inflation or whether you don't have inflation, the company must be able to generate profits that are going to be growing over time. And how do you do that? You do that mainly through increasing the prices of the goods that you sell. And so that magical quality, pricing power, particularly with companies that have been around for a very long time, you can see that sort of pricing power come through because they've been able to survive, whether it is recessions, whether it is fast economic growth, they've been able to sort of survive those things. And when we're talking about stocks for the next generation, what we're actually sort of saying is, how are these companies going to be able to stay around for the next 100 years or more? Now, many of the stocks I have in my portfolio, Brian, excuse me, have been around for over 100 years. And it is quite phenomenal that they've been able to survive 100 years. Now, I know a lot of people like these sort of new young companies that are around, but I look for companies that have been able to whether it is depressions, recessions, whatever it is, wars, they've been able to sort of survive all of those things and still be around today. And these companies, believe it or not, are still able to grow, which is really the most phenomenal part of their business.
And I think one that ticks the boxes in your portfolio, which you mentioned in this article, and is a Bursa Malaysia company, is Nestle Malaysia, which is over 100 years old.
Well, exactly. Why not? I mean, you look at Nestle's Malaysia. What does it produce? It produces consumer goods, things that we use on an almost daily basis. Excuse me. And so, Milo. Is Milo going to go out of fashion, anytime soon? Probably not. I mean, are chocolate bars going to go out of fashion? Probably not. I know we have this sort of big concern at the moment about too much sugar in products. But having said that, these companies are managing that situation, and they're saying that they're going to be able to reduce the amount of sugar content in their drinks and in their products. They're going to be changing the packaging to cope with this big concern at the moment about wastage in terms of packaging. They're doing all of those things. Why? Because they have the experience, they have the ability to do so. And why are they able to do that? It is because they have cash flow. They have positive cash flow. And those are the ingredients that you should be looking at in any company, the ability to generate free cash flow to do the things that they need to do.
Now, David, looking ahead this week, what are some key things that you're looking out for in terms of data points and events that could move markets?
Okay, Coca-Cola is going to be coming out with results, and people will be looking at this company and sort of saying, how is it being able to cope with things like COVID? How is it going to be able to cope with the reopening of the American economy, the global economy? How is it going to be coping with things like pricing pressure? Will it be able to increase its prices on the products that it produces in order to compensate the rising price of, say, sugar? maybe palm oil, all of those things, the fuel costs that go into the manufacturing process. We'll also be hearing from Abbott. That'll be another company, Procter and Gamble. I mean, these are all companies in my portfolio, Brian, and I'll be watching very closely to see whether or not they'll be able to increase the dividends that they reward me for holding those shares over the long term.
Now, David, as always, thank you very much for your insights, and thank you very much for taking your time to be on the show.
Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor in Singapore, on Biztech's Asian Midday Market Watch, powered by Al Rajhi Bank Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Al Rajhi Bank's social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.